Hi, it's Jeffrey Cohen, President and founder of U.S. Advanced Computing Infrastructures, Inc., also known as Chicago Quantum, registered investment advisor here in Highland Park, Illinois. Here to talk today about the Empire Strikes Back. Stocks are up today. I was saying to my wife yesterday, I had a huge carbohydrate crave because the market was so crazy. I just felt so much angst that I was nervous because the market really did crazy things. So I decided I'd get involved. I'd spend the day today. I had a more relaxed shirt on, and so let's talk about what the market's doing. The market's acting really a bit strange today, and so I spent my whole day doing due diligence on different stocks. And so first thing, I'll just show you FinViz. I like FinViz. Financial visualizations. And so if I zoom in a bit, you'll see the market started off this morning down, and then a couple pieces of news came out which actually have driven it much higher to roughly 39.50. And one of them is Credit Suisse First Boston has gotten a lifeline from the central bank in Switzerland, about $54 billion. That's a big one. And looks like some other banks in the U.S. are going to get, some bailouts. And what I saw was different. This is the thing that we don't talk about, but this is what I saw. I've got so many screens up that I need to actually, handle them here. So the big thing I noticed was that interest rates have dropped to the floor. Interest rates are down like crazy. And so where can I see that? Maybe I see it in the futures. So and a lower interest, so you see how it's negative? So bond prices going down means interest rates going up. But what I saw all day today was interest rates going down, which would make bonds go up. So for some reason, it doesn't look that way right this minute. So I'm going to go ahead and pull up what I need. So 1 month U.S. Treasury bill is yielding slightly under 4%. And if I look at that over a month, and this is Market Watch. I like Market Watch. So it's been running like 4.5% or more, up to 4.75%. And the fact that 1 month money is so inexpensive now is a big deal. That's really good for stocks. And I can explain in a minute why that is for anyone who doesn't get it. I'm also going to look for 13-week. And we know, because I've shown you how to find it on the show before, that the 13-week future isn't the same thing as if you were to go out and find a 13-week treasury bill to buy, because the last treasury bill you could have bought on the 13th would have yielded you 4.8%, and now we're at 4.575. I'll do the same 1 month view, and you can see how rates were easily going from 4.75% to 5%, and boom, they're down to like 4.6. So very positive. Now, why is this positive for stocks? Because these two things make up your risk-free rate. The rate at which you have a choice with any dollar that you might have in your pocket. Go into my wallet, right? I got $20. Am I going to buy a stock with that? I don't even have $20. Okay. Wow. I am really wealthy. I don't know if I told you guys that. You should be very impressed with how wealthy I am. I have $6. Okay? $6. But so I have $6. The question is, where am I going to put it? I can go put this into a U.S. Treasury and earn 4.8%. At least I could a few days ago, on the 13th, 3 days ago. Or I can earn in 1 month, I could get a 4%. Or I can drop it back into stock market. That's really the choice we have. A lot of what money managers do is they decide Am I putting my money in stocks, in bonds, in cash, in commodities and physical assets, real estate investment trusts? Am I buying oil wells, oil pipelines, master limited partnerships? So I think I read somewhere that 92% of portfolio manager returns come from portfolio allocation. And so, yeah, this is a big thing right there. 1 month treasuries. I mean, it says it's up 6 basis points or 0.06%, but truthfully, 4% is pretty low, right? And so, and the 13 week at 4.57, pretty weak. Now, what I did notice is that the European Central Bank raised interest rates today. Let's see if I can find it. Central Bank interest rate raise. It was 50 basis points. Yeah, so the European Central Bank pushed ahead with a half-point increase in interest rates on Thursday. What's interesting is it says it's up to 3%, but I actually thought it was up to 3.5%. So maybe I'm just a little bit of a knucklehead, but raising rates 0.5%, given all the banking crisis, means the Fed's probably going to raise rates. But that's okay, because right now the market is saying, I'm driving your 1 month rate below policy. So the market has spoken. Now the market's saying in the 15 week, you're still going to pay me 4.6% interest. But for 1 month, for quick money. So that's good for stocks. That's really good for stocks. So the question is, what do I see? Like when I go to Twitter, we'll just look at the last couple of posts. 50 basis points coming in. Moving back to tech. Market going up. And so I'll show you when I looked at the market, what did I see? So first off, I posted this on social media that I was going to be doing this this discussion. So I heard about Janet Yellen having this discussion, and I guess it didn't go very well. So that's fine. Let's actually look at some stocks. And I've got stocks that I'm actually doing due diligence on, and I see a lot of very attractive stocks right now. So I love it. I love it. Any questions out there? Question mark? Love it. So Summit Midstream Partners, I'm excited about it. I'm actually looking to make a purchase. I'm doing a ton of due diligence and feeling good about that. Fathom Digital Manufacturing Corp is another one I'm doing some due diligence on. Corbis, I'm always doing due diligence on Corbis. Who knows, right, where the market's going to lead us. And so chips, computers, chips, and telco. So the B2B space. And so in the B2B space, it is dramatically positive, with the exception of Lumen. And so I will have you know that I am doing some due diligence on Lumen. So when I think about stocks that might go up, I think about Fathom Digital Manufacturing. I do not own these stocks right now. I don't own them. I'm not pumping them because if I pump them up higher, it'll just cost me more to buy them. So that's not what I'm doing. I'm just telling you, Lumen. Doing a ton of due diligence. Okay, and there's a good story on Lumen. There's a good story on Fath. Effectively, these are turnaround stories. These are companies that got caught short. So Lumen just did a rights issuance. They're looking at offering new secured debt pay off some of the unsecured debt and to push out the maturities. It's interesting, right? I don't know whether it's going to go well or not, but CSC, Dish, Lumen, T-Mobile, Verizon down. So your phone carriers are down. Telecom is down. I don't know why that would be. But computers and software and services are up. And so telecom is down, services is up, and hardware is up, and software is up. So telecom down, hardware, software, and IT services are up. Okay, good to know. I don't know why that would be, but okay. Let's take a look. So Lumen, you see, is really like in trouble, right? They got 1 billion shares, so the whole company is $2.5 billion. It's interesting. I don't know. We'll have to see. So chips and semiconductors, which I look at as a whole industry group, so I'm not looking at company-specific valuations. I'm looking at the whole thing. And what I see here is, I see it's all green. Thank you. That's my Claire Brum sparkling water. It's really good. So why is money flowing into chips and semiconductors? It's a bullish bet, and I bet you it's a bullish bet because of interest rates. Now, it's so fascinating because interest rates are going back up. But I thought this morning that the massive decline in interest rates was going to drive stocks higher. In fact, our run last night picked 35 stocks as opposed to 65 stocks. So 0.2% reduction in interest rate does make a difference on asset allocation. We're kind of at that tipping point. And so I'm looking at it now, right? Treasury yield is up to 3.57%. I don't understand. I'll just say it that way. I don't understand. Yesterday, you couldn't give away debt, and now people want it. So, trucking and transport. This is interesting because this is a question about, are we heading into a recession or not? And every single trucking and transport stock, of course, okay, one of them goes down by 4 cents, but they're all green. I will let you know that we are tracking yellow. Let's see if it's worth showing you guys. So Lumen is 251. I think you can see that. You can see that. Fathom is here, and I worry that by telling you, my loyal and faithful listeners, about all these stocks I'm doing due diligence on, it's somehow going to drive the price up and I'm going to suffer. But truthfully, you now get a chance to buy these before I do. I like it. Summit Midstream Limited Partners. I was looking, and there's a very well-appointed money manager that has just come out and has roughly 8.9% of the stock. Doing some homework on the guy. I don't know him personally, but it's interesting. Another interesting stock, Cleveland Cliffs. Now, there's a friend of mine who's also heavily invested in Cleveland Cliffs. By the way, I have a friend of mine who's heavily invested in Summit. But what can I say, right? It's these are good, deep value investments, and we're tracking them. We love them. I mean, I don't know. Maybe it's not today. Maybe it's tomorrow. Maybe it goes up in a week. Maybe it goes up in a month. But we'll just have to see what happens there. And then there's an old favorite of mine, Corbis. Now, Corbis seems to have recovered some of its luster. Now, I'm not going to say much. I own Corbis. I have a position in Corbis. And so Full disclosure, love Corbis. I love it. I love it. I love it. I love it. I love it at $100 a share. It's at $4, but that's fine. Love that stock. What else am I watching? I just want you to know what I'm watching and what I'm doing and what I'm feeling and what I'm thinking, right? Because it's just fascinating what's going on out there. And there's probably some others I've been doing some due diligence on, so I'm going to share them with you right now. I'm just going to share everything. I'm going to show you my butt if you want to see it. I don't care. So, we're money managers and we care about this stuff. I was so stressed out this week with the banking crises. I got to tell you, and I was so upset with myself because we called the decline in certain banks because of their off-book losses. And we were right. We were just early, and it really frustrated me to no end. I have to tell you that it made me feel bad that I was right, but I was early. And being early means being broke because you lose all your money while you're waiting, right? So Freeport McMoran eventually. I'm not quite there yet. Oh, where's yellow? Where's yellow? Ugh. Did I lose that? Hang on, I gotta find it. Yellow, yellow, where are you? Yellow's the other one, and I like yellow. The problem I have is I don't know that the stock is actually worth it, but I like it. And we're going to have to figure that one out, right? Like, is that a good buy or not? And I think it might be. I do. I'm looking at it. I don't know. But I keep doing due diligence on all of these stocks. And what's going to end up happening is I'm going to put a little bit of money. I'm going to spread it out like pixie dust across all of them. Now, you'll notice a lot of stocks I'm not mentioning. I'm not mentioning Hormel anymore. I'm not mentioning my 3 favorite shorts. There's a lot of stuff I'm not mentioning. But for right now, this is kind of the serious business that I'm looking at. And so I do have some short potentials there. I like it. I got to tell you. So I did a food and beverage look. And food and beverage was down. It's still down. So I'm left with the question, why is food and beverage down and tech is up? I don't know. Kraft, Hormel, Kellogg's, Campbell's, General Foods, Hershey's, Constellation Brands, which is liquor, McCormick, Pepsi, Smuckers, ConAgra. God, I love ConAgra. Coca-Cola, Keurig Dr. Pepper, Mondelez. Why are they lower? And so I think the only thought here is that maybe people don't believe that inflation is over. Maybe they think the Fed's going to take a pause. The Fed takes a pause, it lowers interest rates. If it lowers interest rates, tech goes up. Semiconductors goes up. The things that you saw, the high beta stocks. Let's look at high beta. Yeah, high beta is pretty much all up, right? People are positioning themselves. They're rotating into high beta because it only takes a couple of days to make $1 million, right, on high beta. Because these things move fast, right? So if you catch the updrift, you make money. Same thing with semiconductors. So, but that's not where I roll. I'm not looking for the fast buck. So let's take a look at oil and gas. And so FET does drilling support services like Halliburton. And that's down. NGL, Master Limited Partnership, does a lot of processed water. You see some of the big names, BP, Shell. KMI is a big oil pipeline. CEQP is a Master Limited Partnership. There's Exxon. There's Sunoco Limited Partnership. And so some up, some down. I just don't know, right? It's just interesting to look. So like Occidental Petroleum, which is a big U.S. play, U.S. Exploration play, is up, 3.4%. But then Bohr bore drilling. Crap sandwich. So I don't know. I'm looking at this and I think I don't really understand the market. I don't understand why for a week energy's been down and suddenly now energy looks like it might be coming back. So that's okay though. So what homework have I been doing? Summit Midstream Partners. I'm studying their 10K. I took a look at the new Cleveland Cliffs. That actually goes to a different thing. It's just interesting. You look at Cleveland Cliffs, you look at Summit Midstream, and you try to figure out where's the edge in this market, where's the opportunity. For Cleveland Cliffs, the story is so positive, but the market action is so aggressive on Cleveland Cliffs that I kind of have to wait. Like I force myself to wait. So I'm going to show you what I'm talking about with Cleveland Cliffs. I do not own Cleveland Cliffs. This is not my stock. I'm not pumping it. A friend of mine owns it, which is fine. These are one standard deviation Bollinger Bands. So it's a good... It's tighter than maybe you would be used to. And so if I go back a year, you can see Cleveland Cliff came up with the stock market bull market. And then it came down to about $15. I thought about buying it. It went up to 20, and I watched it at 20, and I thought, okay. So then it came back down to like $12. November, it's back up to 20. So I'm like, okay, it's happening, right? But now it's back down to 17, and I truly don't understand why it moves quite that much. This is a fairly predictable business. It's really a bet on steel prices, and in many cases automotive steel. So it's also a bet on the automotive industry. And maybe there's some factors there that I'm not aware of. Most of their employees are Teamsters or United Steelworkers. I think it's United Steelworkers. And so union, but that's good. Union means contracts, means predictable, means consistent relationship between management and labor. I'm good with that. But for some reason, it falls below Bollinger Bands and it stays lower. So right now we're below Bollinger Bands, and I think it could continue to drop a lot, right? But this is Cleveland Cliffs. I like Cleveland Cliffs. I'm studying the 10K. There's some good information in it, right? You have to understand the business before you're gonna make that investment. Same thing with SMLP. You have to understand they did make an acquisition for about $300 million. That acquisition, in theory, is going to raise their EBITDA pretty significantly, but then you look at the stock, and SMLP is trading pretty much flat. I mean, it's up a little, which is nice. You look at it for the month, you look at it for the year, and you see really it's a story. It's an up and down story. And low volume. It doesn't even work in our model anymore because they have too many days where the volume is under 10,000 shares. So it just doesn't trade enough for it to be in our system. My guess is if it was in our system, it would show up as being a pretty good pick. But I have a lot of information there. So we talked about Fathom. So Fathom loses money. Fathom made a bunch of acquisitions in manufacturing, very specific manufacturing, what I would call high-speed, high-tech manufacturing. You want a prototype, you call Fathom. You want digital printing of parts, you call Fathom. It's fun. You need system integration support services. They got lots of equipment all over the United States. And so they made all these acquisitions, and I was looking. If you look at the acquisition less the intangibles, the goodwill, they started paying like 2 times assets. By the end, they were paying 4 times assets for acquisitions. Plus about $1 million in acquisition to Bob. Plus, they were paying themselves. One of their own affiliates got bought off with a couple $100,000 every time they made an acquisition. So guess what? Fathom is not looking too good right now. Fathom looks a little bloated. It's not making money. By the way, PA Consulting came up with their manufacturing reimagined branding. I think it's tremendous branding. I mean, it reminds me of that movie, was it Wall Street, where Bud Fox was going to turn around the airline. And the question is, what did Bud Fox know about airlines? Well, he didn't have to know anything. He just had to call PA Consulting. And next thing you know, Bud Fox is going to be the CEO of an airline, right? He's going to have a whole new marketing play. We're going to fly the friendly skies, whatever, right? So what happened is Fathom has a good marketing pitch. They do have solid assets. They have skilled employees, but they lose money and they owe a lot of money and they pay a lot of interest. So you lose money, you owe a lot of money, you pay a lot of interest. You made acquisitions that were overpriced. And I don't know, you go bankrupt. The only thing that's going to save Fathom is if they get rid of all the Bud Foxes and they go back to just making stuff and they cut cost. And so right now they're spending $2.6 million on one-time costs to reduce their overall run rate by like $19 million, which will make them profitable. So if they can become a profitable manufacturer, then Fathom stock goes up. It's that simple. It doesn't have to be, Bud Fox with a new marketing program. It could just be Fathom made a profit and their clients are happy. Their clients are happy because they do the job that they said they would do. And that works. It's nice, right? That's what you want. So Fathom is a turnaround story. Yellow is a turnaround story, but it's also an economic turnaround story. So Yellow will only ever be profitable if they can grow their freight. And February grew freight over January for the first time that I remember by 0.5%. So we're not talking about a big recovery. But at least it's not negative. So Yellow maybe. And I understand that gasoline prices are coming down. Let's take a look at EIA.gov and let's see something about diesel. Maybe diesel's going down. I don't know. All right, is diesel going down? Am I a knucklehead? Did I get it wrong? I mean, natural gas futures are lower. Oil's lower. But that doesn't mean diesel's going to go down. Where do I find it? Come on. I thought they published diesel prices. All right, we're going to find it real quick. EIA DIESEL prices. Here we go. Diesel. It's down 3 cents from a week ago. It's down $1 from a year ago. That's good. That's going to help them. Okay? So that's good news for Yellow. I probably should have a place where I put all the Yellow tabs. But, all right. So that says that let's follow Yellow because Yellow might actually go up if the price of oil and gas goes down. And so that is a reasonably good bet to make. That is an interesting bet. So you got Fathom, which is a manufacturing turnaround. I love you people that are driving the price of Corbis up. I really do. I just want to thank every single one of you for being nice people. I do. I appreciate it. You guys are very helpful, and I just want to thank you. But I don't know. So, just going to take another look at where we're at. So what's interesting is Fathom is 72 cents a share. Yellow is at 226. Cleveland Cliffs is at 1764. Lumen's at 250. So maybe it's worth talking about Lumen. What did I find with Lumen? So where is all of my... Where's all my data? Let's go back to my interest rates. Let's see if they changed. 1 month Treasury at 3.99, so it's 4%. Still pretty low. 13-week Treasury at 4.57, still pretty low. I hope you like that I made like a nice little thumbnail for you guys. I've been really trying this out, trying to make it more professional, make it prettier. So hopefully you like that. Again, yellow. Okay, so what I found with yellow when I took a look was, here's where I found, by the way, the gain on yellow. The year-over-year tonnage result in February followed a 27% decrease from 2022 to 2021. So February is down 2.5% from 2023 to 2022. So it's bad comps and we're down again. The only good news, on a sequential basis from January to February, tonnage per workday increased 0.5%. Finally, yellow sees some growth. I like it. Now, there's a lot of risks on yellow. One of the big risks is, how do you get truckers to drive the rigs? And then you think about all the equipment, and I'm on their mailing list, so I get all of the closure announcements. They have weather. They have to deal with weather. That's crazy talk. Yellow has to deal with weather. And so it just is what it is, right? You know. And so yellow is not your easy bet here. We talked about Cleveland Cliffs, right? This is a bet on automotive. We talked about Summit Midstream. I'm still making my way through the cash flows on Summit Midstream, so I don't have an answer for you on Summit Midstream. But I do have an answer for you on Cleveland Cliffs, which is, I love Cleveland Cliffs. I just don't know if I love the valuation today. So that's interesting. Cleveland Cliffs is interesting. Summit's interesting. What else was I looking at? You know, it's funny. I'm just walking through my screens here. I just hope there's nothing inappropriate up here. So, you know, no one's asked me about my shirt. This is a Guatemalan native shirt. I've been to Guatemala a number of times. Guatemala is very hot. It's very dangerous. And when I went, I bought this shirt. And I don't wear the shirt very often. That's why it's still nice and white. But I like it. It reminds me of the kind, good-hearted people of Guatemala. America stands with you, people. We love Guatemala. And I'm very sorry for the 50-year civil war that we caused. It wasn't your fault. He just shouldn't have messed with the United Fruit Company. So, there you have it. The shirt reminds me of the United Fruit Company. And the war, and the Civil War, and the horrendous violence, and the recovery, and now the love and peace that you see in Guatemala. Although I wouldn't go without security guards. All right, trucking and transport. So we talked about that before. Trucking and transport looking good. because, you got a little bit of a reduction in fuel prices. You got a tiny bit of a recovery. I think it's great. So trending tickers. What did YouTube have to, not YouTube, what did Yahoo Finance have to say? Well, The Honest Company. That's like, excuse me. That's like the Tattooed Chef Company. I don't know. I don't know what I'm seeing there. I'm not seeing anything worth talking about. The most actives. This was interesting. I look at the FINRA bond information, and that's always cool. I haven't really been keeping my eye on this one, but let's take a look. So this is CoiFin, and they have a one-page visualization of the market, and you can see how the market really screamed higher, and real estate down, tech is up. Tech and financials, and consumer discretionary and comms. Tech is up. Tech is up because interest rates are down, and tech is a long-duration investment, meaning you put money in tech today, you expect to get paid back in a few years. And so I'll turn that off. I don't really care about that. I did a lot of homework on Fathom. I think it's interesting. You're going to find Fathom to be a good story. It's a good story. Fathom is a good story. It's Bud Fox in Wall Street. But on the other hand, I would be very nervous about reading into anything that isn't a direct operational improvement. That is when we go there. So operational improvement in Fathom is what I'm looking for. Okay. So I think I've made it through this whole set of tabs. I have so much to read and so much to do right now. It makes my head spin. So we talked about energy, and energy is really about yellow. Cleveland Cliffs is really about future steel pricing. And I know I have it up, but I'll pull it up here. CME, hot rolled steel, runs about $1,200. This is the most important price when it comes to Cleveland Cliffs. Hot rolled steel. Now there's another one, which is scrap. Ferrous scrap. View a metals product. Ferrous shredded scrap. There it is. Oh, come on. No one's making a bid for that, so let's find a different one. Where's my scrap? I don't know how to read this, so I think I need to look at what it is, the specs. So, but it's $450 a ton. Okay. Still not sure I understand it, but here's the thing. If scrap costs $450 and a ton of processed rolled coil steel is $1,200, you're talking about the arbitrage between the two, and the cost of scrap I know has been going up, but so has the price of the hot rolled steel, and so hopefully the margins continue to increase. That's where we're at with Cleveland Cliffs. So I'll shut that one down. What else do we have to look at? There's so many things on my plate, but it's good. We're going to get you there. You're going to find it all. Now, again, looking at the prices, things aren't really moving. Lumen at $251, Yellow at $226, Fathom at 72 cents, Corbis at $432, Cleveland Cliffs, SMLP. Yeah, this was interesting. So Lumen, doing a lot of homework on Lumen. Let's see if I have anything else open on Lumen. I may not, but they have an exchange offer for Lumen senior notes today. And here's what they're going to do. They're going to take unsecured debt and make it secured debt. This is the level 3 financing. Level 3. Remember they bought level 3? It's got a lot of really complex financing in there. Level 3 specific, but it does not touch the Lumen stuff, right? So you're moving from Lumen to level 3. And so it's just interesting. They're going to make some money. They're going to be able to reduce their indebtedness. I appreciate that. So I kind of like that. So there's a whole bunch of stuff here. Here's their network map for Lumen. So if you look, I'll accept all the cookies. I don't care. You can see a lot going from Japan, and through like Hawaii. You get a lot going to Europe, going around Africa. There's no real network in Africa. They don't really have a network. A little bit here. They have no network in South America, but that's valuable. So this link around Africa is probably very valuable. And then you got, your Persian Gulf. You see that's Israel, through Europe, through the Baltics, through Russia, I was surprised about, into China. The China connection is really through Russia to Europe. It's almost like it's just interesting. When I look at this, I think Lumen's got an important network out there. And so CenturyLink, they own CenturyLink. It's not our business. If you take a look at Lumen, it's yielding 19.6% unsecured. So it really is trading at 50 cents on the dollar. Lumen is a bankruptcy risk. At least that's how it's trading. And so this is tough stuff, right? You got to have thick skin to invest in Lumen because Lumen is a bankruptcy risk. So S&P 500. This morning, I thought for sure we're going to be looking at a house of pain. And in fact, by the end of the day, it's up, right? So I don't know. You see? NASDAQ jumps 2% because First Republic may not go bankrupt. Okay. There's a lot of banks that are going to be in trouble, but they're kind of all recovering. A lot of these banks that I have in here are banks I've been following. They're story stocks. First Hawaii, Bank of Hawaii. There's just a lot of Lakeland Financial did not really fall much. Lakeland Financial is on Indiana, like a state bank. It's not bad. Okay, we're going to take a look and see. Look at that. The NASDAQ's up 2%. So there's really no logic for why the NASDAQ should be up 2%. And it's interesting that you've got the 10-year up 0.8% interest rate, which is a lot. And so, all right. So that should drive stocks lower, but I think what it means is things are kind of settling down. So Lumen, there's a lot of due diligence required. There's a lot of due diligence out there. So this is Fathom, but this is with yellow. So where's my yellow stuff? So interesting. There's so many things to look at. And we're just going to keep going. So that's my energy outlook. Yeah, so D-Wave. So I did some homework on D-Wave. And I'm not sure, from a financials perspective, D-Wave is not doing so well. I'm not sure. You kind of have to believe on D-Wave, but the money stuff is tough right now for D-Wave. It is. I don't know what to do with that. That's going to be tricky. So I think that's about it. That's what I've been looking at. And so, yeah, there's some good stocks out there to watch. There's some things to look at, right? Oh, here's Fathom. Good. Here's all the stuff on Fathom. There's just a lot of due diligence. A lot of due diligence. Where's yellow? Yeah, here's yellow. Yellow's got some other issues that I just want to tell you about. Super fun. PRPs. A PRP is a potentially responsible party, which may be required to pay more than its proportional share of any environmental remediation. And there are a lot of Superfund sites because yellow is kind of old and kind of involved. And there's a lot of risk factors. Tons of risk factors, okay, for yellow. So when we look at yellow, 2022 compared to 2021, revenue of $5.24 billion, operating expense of $5.04 billion, so they had $200 million of operating income. It's not bad. Non-operating expenses, 170. So they made $26 million. It's not meaningful. It's not a very big number. It's 0.5% of revenue. They have a 0.5% margin. Okay? That's interesting. It's a 0.5% margin. How are you going to do anything, right? In 2020, they made a lot more. No, they lost more. So in 2020, they lost $20 million. 2021, they made... Show me the money here. Yeah, they lost $53 million. They lost $109 million. They probably almost went bankrupt in 2021. 2022, they made $22 million. So it's not bad, but they owe a lot of money. I don't care about EBITDA for a minute. They owe a lot of money. They increased their capacity for their bank lending program to $500 million. They invested more than they made, for the most part, for the last 3 years. It's important because they have to invest in their terminals and their trucks, their trailers, the what do they call them? The tractors and the trailers. They have to make capital expenditures. They have to. They have to. And so, look at these loans. They owe $2 billion. And they owe it within 1 to 3 years. How are they ever going to pay that back? They owe the U.S. government $829 million, and they do a pay-in-kind interest. It was really $800 million before. So I struggle a bit with yellow being able to even make it, right? They have their ABL, they owe 24, they have term loan, they have a U.S. Treasury loan. They do actually, the government, they borrow money from the government. So maybe they can push that out, but maybe they can't. They owe $290 million now, and they owe $1.5 billion in the next 3 years. So the only way these guys are going to make it is if they can somehow turn the corner. So they've got to earn some real money, which means they can't just earn $20 million. So yellow is a bankruptcy risk. If we look at yellow on Yahoo Finance, you'll understand that that's how it trades. So the company owes $2 billion. The company's worth $200 million. No, the company's worth $117 million. So their debt to equity ratio is like 20 to 1, 19 or 18 to 1. So they owe $2 billion and their equity is 117 million. Again, the only way this thing survives is if they could somehow restructure and start paying down that debt. But let's be honest, they have to do capital improvements. They have to keep the tractors and the trailers updated. They have to keep all their facilities running. They have to pay increases to their union and non-union employees. Yellow is stuck between a rock and a hard place. Maybe if gasoline prices come down, maybe if we avoid our recession and shipping goes up. So yellow is a true risk. It's a true lottery ticket. Still might do it, but I'm just giving you a really good idea of why yellow is interesting to me. But they do have to make it. And D-Wave, unfortunately, from a money perspective, they're just struggling. They don't have enough revenue. They don't have a game plan. Anything else worth talking about? Probably not. I got a lot more work to do here. And I'm sure you guys do as well. So when I say the empire strikes back or the stock market strikes back, what I mean is the market is up today. Interest rates have reacted, have started to adjust. And what that means is that stocks like yellow are being given a second chance. There's a little life being breathed into these stocks. Yeah, that's right. And so I'm following a bunch of them. And the poor ones are going up. It's just so interesting. You just follow along and you try to figure out where are we headed here. And that's it. So thank you very much for watching. If I don't have any further questions, I'll wrap it up. And if you like the video, hit subscribe. Appreciate it. Drop a comment. I read the comments. I respond to the comments. In fact, it was a comment yesterday that asked me to make the picture smaller and put it in the upper right so people can see what I'm sharing, and I did. So hopefully you like that. And go ahead and hit the subscribe button. Go ahead, maybe tell 3 friends that you like it, and let's go from there. If you want to learn more about us and our business, and by the way, I did update the website, and I did update all this market information. It's all current. So if you like negative beta stocks, it's as of the close on the 14th. Here's a list of stocks. I give you a ton of free information that comes out of our model. And so just check out our website. We are U.S. Advanced Computing Infrastructures, Inc. We're technology consultants, and we're registered investment advisors. We're out of Highland Park, Illinois. Here's the services we offer. We got a brochure. We're ready to work for you. And let us know. Thanks so much again for watching. Really appreciate it. And have a great day. All right. And good luck in the markets. Bye-bye.